This truly is, in my opinion, the best way to learn forex trading if you are a complete beginner. It is the most simplest, clear-cut way to profitability. And I don't just say this for any reason. I say this because I myself have been trading 8 years. Through forex, crypto, and stocks, I've made millions of dollars over the past 6 profitable years of those 8 years, and I've taught thousands of people how to trade, and the simplest things are usually the best things. That is what has consistently worked for most people. If you're watching this video, you got recommended this bald guy rolls up on you with a beard yelling at you here on YouTube. You saw the title and the thumbnail and you're like, okay, I think I'm going to watch this. This video is a way for you to completely tune out all the noise and structure everything in a very simple, predictable, straightforward way. And a lot of the stuff I'm going to teach you here in this video, it makes sense whenever you think about it, but it's probably stuff that you might not have even thought about before just because you had a complete mischaracterization about what profitable trading actually looks like. This video is going to be just straight cut and to the point, so without further ado, let's go ahead and get into it. By the way, I literally share all my daily trades and analysis for free for the past 6 years in my Telegram channel, which you can join right now by clicking the link in the description. I'll probably put it in the pinned comment as well. It's just a group where I just share the trading opportunities that I take, analysis and things like this. I just share all my insights in here. And you can join this for free. I've been running it for the past 6 years. You can just hit the first link in the description or the pinned comment or something. There's 61,000 people in here right now. That's a free resource. You can watch everything I'm about to show you in this video. You can follow these same concepts live for free every single day, indefinitely. So that being said, let's go ahead and get right into it. I'm going to take you to a blank chart. And I'm going to show you this right here. If you'll notice, all we're really seeing here is we're seeing a zigzaggy line, and we're seeing a TradingView long short position tool. Now, I want to account for something here. There's some context here. There's context, there's nuance, there's subtleties, there's a bunch of details. All of these details, ultimately, you are going to learn through experience. If you want to be a keyboard warrior and yell at me in the comments saying, but Nick, you're forgetting this and that, feel free, go ahead. At least you're giving the video more engagement, and I appreciate you commenting regardless of what you comment. But that being said, I want you to understand that the things I'm teaching you here in this video, if you're a complete beginner, you are probably doing a lot of things that do not matter at the cost of things that really, really, really do matter. When what I'm trying to get you to focus on is the things that I just think personally are just more important to focus on. I say this all from experience. I say this is just my opinion. I will also tell you that trading is risky and most people lose money, and you are likely to continue losing money, even if you listen to everything I say and even if you spend years trying to learn forex trading. I'm talking to those of you who are not going to give up, to those of you who want to make trading work, and those of you who are willing to challenge your own beliefs and preconceived notions and take action in a particular way that helps you get closer to your goal and learn and become a better trader, not just a better trader, but a better person over time that can actually make decisions that result in long-term profitability. It all starts with keeping things very simple. There's going to be a lot that I leave out here. I would have to make a video that lasts an entire week long to give you all of the context and everything. I'm not going to do that. I'm going to keep it very straightforward for you. So that being said, let's go look at a chart again. Price ultimately goes up and down. Price goes up, price goes down, price goes up, price goes down. And you don't have to take my word for it, looking at my little squiggly line to pretend that it's price. You can go and look at the actual price data. Whenever you go and look at any chart, you will see that price among upswings and downswings, it just goes up and down. Price will go down somewhere, it'll stop, it'll go up, it'll stop there, it'll go down, up, down, up, down, up, down, up, down. What I've developed is I've developed a skill set of trading, which is just intuition, which I can kind of feel like when I think price is likely to go up or down. Only way you'll develop this is through a minimum of 6 to 12 months of just watching what happens over and over again. To be able to trade profitably as a manual trader requires discretion. It requires subjective judgment. It requires intuition. And the only way you develop this is through keeping things very simple, finding a way to control risk, and then just watching what happens over the course of like 6 to 12 months. By doing that, you start to get your finger on the pulse of the market. You hear that? That's the pulse of the market. I'm trying to teach you how to get your fingers on the pulse of the market, and you only get that through experience. Nothing that I say here on a YouTube video or things you could learn in a course or from all these blogs and forums of everybody spouting their opinions, none of it matters. All that matters is you going to the charts, keeping things very simple. That way you have a predictable way of doing the same thing over and over, more or less. Then you just watch what happens. Over time, your brain can start to pick apart things that are more likely to work, and you can take those trades. And then your brain will start to recognize trading opportunities where it's like, probably not the best thing for me to trade. Let me go ahead and just stay out of that. That looks quote unquote weird. It doesn't look like a good trade. It looks like it's too complicated. Something might go wrong. Your brain can start picking that apart if you get the experience in the way I'm teaching you here. So with that said, I'm going to show you by action. I'm going to show you a trade I'm in right now. This is New Zealand dollar CHF. We're here on the daily chart. We can go to the 4 hour. I hang out on the daily 4 hour, 1 hour. You could literally pick one time frame to do this on. It doesn't matter. I wouldn't use the 1 minute and I wouldn't use the monthly chart either. I would use somewhere in the middle. 1 hour, 4 hour daily, from my opinion, kind of works best. I've seen the most people get profitable doing that. Just my opinion, not financial advice. Do your own research, do your own testing at your own risk. So with that said, what I like to notice about price is that price goes up and then it goes down and then it goes up and then it goes down and now it's gone up. And so I made the very highly intelligent judgment that, you know what, I think it's gone up a little too far. So based on my experience of trading over the past over 8 years, it's 8 years and 2 months, I just think price is going to go down. So what have I done? I have sold. And here's actually a group where I call all my trades. It's called MFX Next Trades. This is a trade that I've called out, and here's where it's currently sitting at right now here in the daily chart. Price has gone up. I think that price is likely to drop from where it's at now and go down. And why? Very simple. Price has made a new high, and I think it's likely to revert to the downside. And so I've entered here. My invalidation is further up here, invalidation / stop losses. Sometimes I don't use hard stops. Sometimes I put them in and remove them, and I'll manage a trade dynamically if it starts moving into drawdown. These are all things you're going to learn with experience. Don't worry about it. I'm teaching you just how to structure things very simply. The simple takeaway here: when you think price is going to go down, you should sell, provided you should get a good risk structure with it. If you think price is going to go up, you should buy, provided you have a clear way to control risk with that trade. I just thought price was going to go down, so I sold. Usually my stops are 1-to-1 and my target's a 1-to-1 risk reward ratio. It's just plain and simple. Then I'll manage the trade based on my intuition. There's another trade that I'm in right here. NZDJPY on the daily chart. Let's go and look at that. This way you can kind of visualize what I'm doing, and you can kind of, maybe you can get your fingers on my pulse. Maybe you can come to my house right here. Please don't do that. And put your fingers on my pulse while I sleep to try to figure out why I have my pulse on the market. If we look at NZDJPY, we can see we're going up, going down, going up, going down, going up, going down, going up, going down. Now we've gone up. And so very creatively, you may call me a genius for just saying, well, you know, guys, I think we've gone up, a little too far. And I just think it's likely to, kind of come down. Okay. So what did I do? I sold. That's it. Now, again, I'm going to walk you through how to structure these things, but I'm just showing you the simplicity behind it. There is no support resistance zones. There is no technical indicators. The lines that you see on the chart are just trading view alerts that I've immaturely named panty dropper. Even my watch list is literally named meow. Like, I barely do anything. And I've been doing this over, like I said, 8 years and 2 months. I still do the bare minimum. And just the past 3 months, I've made $180,000 in documented live P&L from every single trade that I've called live in this Nick's Trades group right here. These are all the trades I'm in right now, right? Negative 4K right now, sitting in all these, and I'm just waiting for them to play out, these two trades, NZD trades. So with that said, it is truly this simple. It takes me almost no time. I can tell within a few seconds whether or not there's a setup. And now we're going to get into like how you can do this, okay? So with that said, what I'm going to do is I'm going to represent this first using squiggly lines. And again, if you would like to see me do this live, my free Telegram channel is here. I literally post everything in here. And if you'd like to follow my trades in real time, then this is the Nick's Trades group in Discord. You can join. It's all there. So again, I have the merit to be saying this. Most of the people that you will see giving advice in the comment section of this video, remember, 90% of people are not profitable and they lose money. Be very careful who you take advice from and who you take suggestions from and who you take input from. You should only listen to people who have a track record of actually knowing what the hell they're doing. This is common sense, but common sense is not common practice. Be very careful who you listen to. I'm just saying, there's a bunch of like people who leave idiot comments in the comments, and it steers people away from like informed decision making because they're not using evidence and logic and rationality to craft their decisions. They're using something somebody said, saying, that's sketchy because of this, and this would never work, Nick, because you're doing this. And I'm like, okay, dude, I've made $180,000 the past 3 months just doing this. And I've been profitable the past 6 years. What more is there to say? You know what I'm saying? So let's go ahead and get into it. How can you do this? We're going to go and just look at squiggly lines right now. I'm going to draw them. You go to any chart you want to go to, any asset right here, all these tradable assets. I trade all the forex majors and minors. No exotics, just majors and minors. You can just screenshot or take a picture of everything on the right side of the chart right now. I go there and I just click through the charts and I find a trading opportunity. Now, you can look at price, and here's how you find a trading opportunity. No matter where price is at on the chart, you ask yourself, do I think price is going to go up or down? That's the first step. Now, most of the time, from what I've seen, the answer is going to be, I don't know. Because it can only be three things within practicality. The answer is, I don't know, or I think it will go up, or I think it will go down. Most of the time, the answer is usually, oh, I don't know. And, it might go up, might go down, I'm not sure. It's 50-50. There will be a small percentage of the time where you think that price will in fact go up, or you think price will in fact go down. Now, you're not going to be right 100% of the time. In the very beginning, you will only be right half the time. You will be a break-even trader, but you'll be getting a lot of valuable experience, so that way you can kind of adjust things in the future to then transition into profitability. But you only get there by starting with this. Go to any chart. Do not use any type of reasoning as far as like, okay, it's at a support zone, and it's a break and retest. So I think it's going to test the support and go up. So I'm going to buy, because even if you do that, let's say you buy here at the support zone and then you put your stop loss below the zone, you're only going to have a 50-50 win rate. And you get the same win rate by just not even doing the extra steps and just saying, you know what, I'm just going to sell right here. And so then you sell, and then you put a stop up here, and a target down here. And then you're going to win half the time and lose half the time. I don't want to hear any stupid comments about, but bro, you need to follow the trend, bro. The trend is your friend, bro. Or the people over here that'll say mean reversion is the best. Price goes and extends really far in one direction, which is kind of what I do most of the time. And then it falls back. You can win more than half the time. Or people are going to say you need to follow the moving average, or the stochastic ox oscillator, and the Wagyu beef bullish, Kobe steak, candlestick entry, ICT order block, smart money concept, dictator, South Korean, North Korean strategy, in which you're going to sear the Kobe steak on medium rare to find the bullish candlestick that is the Wagyu beef. Then you will enter with a 72.38% win rate. I don't want to hear it. I'm just saying, if you go to a chart, put my glasses up. You go to a chart, you randomly enter a trade with a 1-to-1 risk reward ratio. I'm just saying, you're probably going to win half the time. You're probably going to lose half the time. You using all of this fancy BS, all these indicators, all this, the Fibonacci retracement, bro, and then it pulled back to the 61.8, bro, and the 61.8 Fibonacci retracement is the golden zone, bro, and that always works, bro, and then stop past the 78.6 and a target. You're going to be right half the time and wrong half the time if you enter literally freaking randomly with the 1-to-1 risk reward ratio. That's why I'm over here just saying, why not start there? It takes no work. You just look at the chart and you just ask yourself, do I think it's going to go up or down? If the answer is yes, then we move to the second portion, which is controlling risk. Now, there's a bunch of ways to control risk. You can control risk through a variety of mechanisms that you may or may not have heard of, such as like dollar cost averaging, adding in drawdown, grid recovery trading, martingale recovery trading, which is like adding with a multiplier, like 1 lot, 2 lot, 4 lots, 8 lots. You can blow your account really quickly doing that. Hedging, waiting for the next zone, adding to the hedged position, closing the profitable one, adding to the losing one, letting it come back. There's a million things you could do. Here's what I think might be a great place to start, not financial advice, just a general suggestion for entertainment purposes only. I think it wouldn't be a bad idea for you to just start with using a stop loss. Pretty straightforward, plain and simple. Then you can learn all the nuances. You can explore other risk structures later if you like. Using a stop loss is just a really straightforward way of saying, okay, at least I know where I'm probably going to get out of the trade at, and I know the dollar amount to risk if price goes there, and then it's a dollar amount that you're comfortable risking. You can set all this up. You can learn position sizing. I have other videos on my YouTube channel. You can type in Nick Sean, how to choose the right lot size. I have a whole video about position sizing, but I'm just saying, put the stop loss where you visually think it should go on the chart. And using a stop loss is, in my opinion, the best way to structure risk for beginners like you who are not profitable yet. So how did I structure this NZD-JPY trade? I'll show you. Price went up to here. I think that it's going to go down. I just think it's gone up too high. I think, it drops every single time in the past after going and making a new high. I just think I have the creative idea that, maybe it might go down. Okay. So how do I structure risk? Remember, the first part, ask yourself, do you think price will go up or down? Most of the time, you'll probably say, I don't know. Every now and then you'll be like, I think it'll go up. I think it'll go down. I've asked the first question on this trade that I'm in right now, NZD-JPY. Do I think it will go up or down? I'm like, yes, I think it will go down. Sweet. Step one is checked. Check mark the box. The next step is, okay, if I think it's going to go down and I enter a sell, how do I control risk? This is it right here. I grab the long short position tool here on the trading view. On TradingView, I use the short position tool here for a sell position, and I click right where the current market price is to illustrate that I'm going to be entering. So after I do that, I start with the stop loss. I drag the stop loss where I think price would be very unlikely to go if I'm right. So in this case, my stop loss is like in the neighborhood of this area right here. It was called out in the Nick's Trades group. So if you want to see the exact price, 99.3. So yeah, it's more or less right here, 99.3. There we go. So there it is. Sweet. I got it. There it is. So, and then I drag after I do the stop loss, then I drag my target to the 1-to-1 risk reward ratio. So now I have a trade here, which is a 1-to-1 risk reward ratio. And of course, a lot of people will be like, 1-to-1 risk reward ratio, stupid. I don't care. If you do it this way, you're starting off as a break-even trader. If you just enter trades with a 1-to-1 and you let it hit stop or you let it hit target and you don't mess with it, you're going to win roughly half the trades and lose roughly half the trades given a large enough data set. I'm not talking 2 trades. I'm not talking 10 trades. I'm talking like 100 trades or more. You should be in the ballpark of like 50% win rate. Yes, you have commissions and swap fees and all that. Yes. But unless you're trading with a broker that is like degenerately greedy, this commissions and swap fees are generally going to account for a small percentage of the overall P&L. It shouldn't be a huge contributing factor, but I'm just saying, just from a statistical perspective, you'll win half the trades, lose half the trades on average if you just do this. Now, let's see what this is. Let's look at the ramifications of what I'm saying here. Okay. You're going to a chart. You're not even using any type of technical analysis or fundamental analysis. It's going to check the economic calendar and we're going to find out where the banks are entering the trade, bro. Like you're not doing any of this, the smart money, ICT, Wyckoff, liquidity distribution, liquidity spike, fair value distribution gap, entry strategy. You're literally doing nothing except going to a chart and saying, do I feel like this is going to go up or down? And of course, when you're starting out, you have no clue what you're doing. You're like, I don't really know. You can just make some shit up. You can just say like, it's at a support maybe, I guess. I don't know. I'm going to buy here and put a stop loss below and a target above. It's that simple. Just ask yourself, do you think it's going to go up or down? It doesn't matter what your reasoning is. In fact, it is better if you don't use any reasoning because then you're not getting any preconceived notions into your brain about viewing the market through a lens that may be completely arbitrary and is at best still subjective. Support resistance is subjective. Using indicators is subjective. Using any type of manual trading strategy is very subjective. You go to a chart, you ask yourself if you think it's going to go up or down. That's it. So with that being said, the next thing you will do is you will ask yourself, how can I control risk for this trade? You are simply going to put your entry where you think you should enter. Then you will put a stop loss and then you will put a profit target. That's it. That's all you do. Then you just let it play out. It's either going to hit the stop, it's going to hit the target. You are going to watch what happens over and over and over. And then that is what you will use to shape your trading strategy. So let's look at a case for buys. We've looked at a case for sells, and then now we'll look at a case for buys. Let's say price is going down. Then it goes down here, and then you think, okay, I think price is going to go up from here. And again, no reasoning. Pure just looking at the chart. You can buy when price is down here. Put your stop loss where you think would be a good place to invalidate the trade at. Drag your target to a 1-to-1 and then let it play out. It is either going to range or whatever. Then it'll either hit the target or hit the stop loss at some point unless it just goes sideways for the rest of your life. Very unlikely. Never actually seen that happen before. It's usually going to go to the profit target or the stop loss. And then you do this over and 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 over. And you keep doing this hundreds of times. And then eventually something happens in your brain. You start to notice whenever a trade is setting up. You're like, okay, I think it's going to go down. But then some weird feeling inside you comes and says, wait, hold on. This doesn't look good. Something doesn't look right. And it's based on some mysterious principle that you can't inspect. And it seems magical. You literally feel like you're Harry Potter. And you've got a magic wand that you're waving your magic wand around. and that you're about to like just make this trade poof into existence and stuff. But there's nothing magical about it at all. That feeling that you get, that is a direct result of your experience. The meticulous amount of time, you examining all the texture, the granularity, the detail, the nuances, the subtleties of every trade you've ever taken in your life, all of that conglomeration of data and experience comes together, and then it's all parsed into your brain, and then it manifests itself into a simple, quote unquote, feeling about what you think is likely to happen. Now, are you still going to be wrong? Yes, of course. But provided you have the experience and intuition, provided you have the experience necessary to justify the use of your intuition and your discretion, you can then rely on that as a very valuable, simple tool to help you with all your trades. And you build it up only by keeping things simple and controlling risk. By keeping things simple, it means that you don't get confused, you don't spend all your time doing all this trash that you see on the internet, and then it means that you can develop a trading approach that works perfectly just for you and your time constraints and your risk tolerance and the amount of capital that you've allocated to trade with. It can be 100% picture perfect, created for just you. And this is what a lot of people fail to admit whenever they're like, learn this simple 3-step trading strategy with you just use a moving average and you buy a stop loss here, a 1-to-3 risk reward ratio. Why has that never worked for you? If it works, honestly, think about it. Why does it never work? At best, it's extremely subjective. You could find a million trading opportunities with that. People make all these videos showing you, here's the strategy, bro. It's your strategy, and everybody gets all excited about that. Ultimately, it comes down to discretion. There's going to be plenty of trades where it should have been a trade that's taken, but the person who uses the quote unquote strategy doesn't take the trade. And when you point that out to them and say, why didn't you take that trade? They tell you, no, it wasn't a good setup. But you're like, but look, it did everything that your quote unquote strategy says. So why didn't you take it? Eventually they have to fucking admit, if they're being honest, that, okay, it just comes down to intuition. I just didn't feel like that was a good trade to take. It's something didn't seem right. Where that comes from is experience. What I've done in this video is I've taught you how to develop that experience, and I've done it in a way that is extremely simple. We're going to recap before you exit this video just to make damn sure you know what to do. You can leave this video taking away something. Go to any chart, preferably a forex major or minor pairs chart, any of those charts. Go to any chart, use the 1 hour or 4 hour time frame in my opinion, and then ask yourself, do I think this is going to go up or down? If you don't know, if you don't really have an opinion, don't do anything. Just wait. Come back to it the next day, 2 or 3 days later, look again, re-ask the question, reanalyze it. Whenever you come across a currency pair where you think, you know what, I think this is going to go up. Remember, do not insert any reasoning. Do not try to say, well, we've made a double bottom at support, and then the market makers and the banks and liquidity for the retail buy-side liquidity, institutional volume is coming in. Don't give any reasoning. Don't look at CPI data, inflation rate data, economic news, NFP. They're raising the interest rates in Australia, so the Australian dollar is going to go down. Don't do any of it. Just trust me. Trust me on this one. Trust me, bro. On my past 8 years of documented experience. Whenever you go to a chart, just ask yourself, do I feel like it's going to go up or down? You're not going to know in the beginning, so just, make something up, and it just, whatever you think. If you think it'll go up or down, whatever. So that's the first thing. Do you think it'll go up or down? If the answer is yes, proceed to step 2. Define the risk structure. If you think it's going to go up, you're going to buy, obviously. Drag the stop loss to a location where you think price would be very unlikely to go if you're right. This generally means you can't put the stop loss super, super tight right close to the entry because it has the likelihood of just pinning down, hitting the stop, and it doesn't give the whole idea time to come to fruition. You want to be able to account for a little bit of market volatility, in my opinion. So I don't think you should drag your stop down like 2,000 pips away from your entry. But, having a stop loss distance of only like 2 pips is probably kind of, insane as well. Drag the stop loss down what you believe is a reasonable amount where if you're right, it's probably not going to go there. And then after you drag the stop loss down, just set a 1-to-1 take profit. Now you're going to get into this trade. You're going to have a 1-to-1 risk reward ratio. The third step, let it play out. Let it hit stop loss or take profit. And keep doing this. After a couple months, you're going to start to notice, if I enter a trade and it starts going sideways, I'm going to close that at around break even, because generally, you might notice, over the past 3 months, every time I stay in a trade after it ranges, it generally takes forever to play out, and I pay a ton of swap fees, and it's just a bad situation, or it ends up ranging and then going against me further and then hitting the stop loss. So that might tell you in the future, okay, a trade management decision that you could do is you could start just closing trades at break even if they range for, XYZ amount of time. You don't have to define like, 5 trading days. You don't have to do that. You could just say, if it looks like it's ranging and it's not working, I'm just going to close it at break even. You get to exercise little discretionary decisions like that, but you're only going to know that with enough experience. So again, as you leave here today, go to any chart. Ask yourself if you think it's going to go up or down. Leave all the reasoning aside. Just say, I don't know, or yes or no. If the answer is yes, proceed to step 2, which is define the risk structure. Where's your entry going to be? Drag the stop loss to wherever you think would be reasonable. Put a 1-to-1 profit target. And then step 3, let it play out. Over time, you will continue to see what the winners have in common and what the losers have in common. And then the conglomeration of all this data that you're going to accumulate and all the experience that you will acquire will generate this beautiful, this Italian level of intuition. You're going to develop this sense of discretion and intuition that you can use to then shape your trading decisions. And that subjective judgment, that discernment of price action, that discretion, that intuition, that is what makes any manual trading approach profitable. And the best part of this, it could be 100% yours and no one can take it away from you because you'll have the experience to justify that it works. With that being said, if you like this video, that's awesome. If you have something to say and you want to say about this video, then cool, that's awesome. And if you want to see more videos like this, then that's great, good deal. I'll see you in the next video. Make sure you've joined my free Telegram if you haven't already. Go and click that link in the description of the pinned comment. Join the Telegram channel. I've just been posting everything in there since like the summer of 2018. It's been about 6 years from the time I'm making this video. That being said, that's all I got for you guys today. See you later. Y'all have a great rest of the day. Cheers to you and your trading, my friend. Bye.